Cost, cost relocating staff who are to work factory, 150 million naira. Allocated general administrative overheads, 2.8 million naira. Interest on loan to partially finance factory construction, in brackets, note 4, 3 million naira. Plants and machinery purchased and used in the building, 8 million naira. Can I continue?
Yes, sir.
Relevant notes. 1, material costs were higher than anticipated. On investigation, it was discovered that materials costing 2.1 million naira had been spoiled and was therefore wasted, and had a further 3.6 million naira was incurred as a result of faculty or faulty design work. I presume it is faulty there.
Yes, faulty.
Faulty design work. Number 2, the building took 7 months to construct and was brought into use on 30th September 2004. The employment costs are for the 12 months to 31st December 2014. 3, the production overheads were incurred in the 7 months ending 31 July 2014. They included an abnormal cost of 750,000 naira caused by the need to rectify damage caused by site flooding. Number 4, the bookkeepers limited received in accordance with IAS 23, that is borrowing costs. The loan carries a rate of interest of 15% per annum. Required, determine the cost of factory to be included in the statement of financial position upon initial recognition, giving reasons for the inclusion or exclusion of costs.
Okay, thank you very much, sir. So IS 16 is a standard on property, plant, and equipment. And under IS 16, from the video we watched, we discussed the definitions of assets and liabilities, the different types of assets, and the categorization of assets. So IS 16 talks about property, plant, and equipment. That is, in layman's terms, assets that we can see and touch. So there are many characteristics before a particular item can be categorized as an asset and as a PPE. So one of the things IS 16 actually deals on is how to classify cost. That's the components of cost. So before we say a particular item is 50 million naira, okay, what are those costs we have put into consideration before we've been able to arrive at that particular cost? So the purchase cost alone of an item does not constitute the total cost of an asset, okay? And not every cost not every money spent should be categorized as part of the cost of the asset. Some of those costs are usually expended. So I believe we have the question. So what this question, the requirement of this question is that we should determine the cost, not treatment yet, the cost of each of this, the cost of the assets, putting into consideration all of these costs that are related to the construction. So we know that the cost of an asset, we have the one that's purchase cost, that's the amount of money you paid for the assets. Then there are some assets that are self-constructed. That is, it wasn't bought in the market, okay? It was actually constructed in-house. So more like instead of buying a dress outside, you sew it in your shop, okay? So the cost of sewing can also be computed, even though we did not buy the clothes outside. So that's for self-constructing assets. So we'll go back to the solution. Please, can we mute our devices? Okay. All right. So the first thing we'll start with the name, the heading. And what we've been asked to do is determination, what to determine, determination, or you could say calculation of carrying value. Okay, let me use cost, calculation of cost. And the reason why I'm including carrying value is because most times we usually just take the purchase cost as the carrying value. Okay, please, Ma, you can ask your question. I can see you raised your hand. Please, do you have any question?
Especially to Rowan. If it wasn't for Rowan, we never would have had an equal to score the real one. It was
At initial recognition. Okay, we have different types of recognition. We have initial recognition, and we also have subsequent recognition. So the first recognition is, please, if you have a question, you could go ahead to ask, or you could drop the question in the chat room, the comment section, please. Okay, so we have initial.
Evangeline, ask a question. Unmute yourself and ask a question.
Okay, I think we'll proceed. Okay, I said we have types of recognition. We have initial recognition. We also have subsequent recognition. So simply means, how can these assets be recognized as at when you just bought it or when it was just brought into the organization. And subsequent recognition could be how much should be recognized as the cost value, as value of the assets, maybe after a period of time, maybe after 5 years, 2 years, 10 years. Okay, so here we're looking at the first recognition. That's the initial price we are going to record in our books. So please, what and what could be included as the components of costs? I'm going to go back to the question. So what and what, I believe we have pen and papers beside us, so we could do some jottings where we will use in the next, in the solutions. Okay, so please, what and what do you think constitutes part of the components of costs? Like if you are calculating the cost of an asset, which cost and which costs do you think we should put into consideration and why? Remember, the question says you should give, should determine the cost of the factory, and then you should give reasons for inclusion or exclusion of cost. That is, you should, for example, if you are saying we should include the cost of purchase of land, you should be able to tell us why you think that cost should be included. So please please, we can unmute ourselves so we can give our individual opinions. Thank you. Please, I'm waiting for us to talk. We can unmute ourselves so we can say something.
Hello, can you hear me?
Yeah, I can hear you, sir.
Okay, I think purchase of land will be part of the cost because the land is an asset. And
Okay.
Since the company is acquiring, they can use it for other things that will bring income to the company. And land is not just something for 1 year, it will achieve more than 1 year.
Okay, thank you very much, sir. Yes, purchase of land is will be included. Purchase of land will be included. Because this figure for purchase of land actually is the amount of money paid to buy land. So it's the purchase of land. And it's 45 million. Okay. So the next one, we have purchase of material to construct the factory. And we've been told that there is an additional information as regards this particular transaction. In some questions, most questions, you will not have these notes, like in bracket, note 1, note 2, note 3. So after reading the question, you go through the additional information, and then you see which additional information affects the transactions in the question. So you don't just start solving and then realize that there was supposed to have been an addition or subtraction based on the relevant notes. So we're told that purchase of material to construct the factory, we have a note under it. And the note says material costs were higher than anticipated. So on investigation, it was discovered that materials costing 2.1 million had been spoiled and was therefore wasted, and had a further 3.6 million was incurred as a result of faulty design work. So what do you think we should do? Because I need our opinions, because the reason why I'm asking for opinions is how would you treat it if you're in the exam hall? That is why I'm asking, I'm requesting that we also contribute our ideas and reasons why you think a particular transaction or figure should be treated the way you think it should. Here is 36 million. And this is the additional information we had concerning that particular cost. So what do you think should be done? What should be added? What should be subtracted? Or what should be ignored?
Hear me. I think this material wasted and the additional costs incurred as a result of faulty design should be deducted from the 36 million.
Okay, so 3.6 should be deducted from 36 million?
Yes, and the 2.1
should be deducted also?
Yes.
Okay. All right, that's correct. So materials cost, we have 36 million. Minus minus 2.1 minus 3.6 million. Okay, how much does that give us? How much do we have? How much do we have?
Please, the material cost should be 36 million now and not 36,500, please.
Okay, yes, sorry. 36 million. Okay, so how much we have?
30,300,000.
Okay. Please, have we been able to confirm if it's correct? Please, as part of the things we have to come to class with is pen, writing a notebook and calculator as well. Okay, we're in the class. Okay, let's look at the next. Okay, so employee cost. Set employee cost here is 30 million, and there is additional information to this effect, note 2. Okay, that the building took 7 months to construct, was brought into use on 30th September 2015. The employment costs are for 12 months to 31st December 2014. Said the building took 7 months to construct and it was brought into use on 30th September 2014. The employment costs are for 12 months to 31st December 2014. So what do you think should be done, or how do you understand this particular transaction?
Okay, I think the cost, employment cost will be 7/12 times the amount stated in the information above.
Okay. So, okay, just they told that the building took 7 months to construct, and this employment is for 12 months. That's one accounting year. Okay, so the building took 7 months, and we're trying to ascertain the cost of the factory. So that means we're going to find out the cost. There are 2 ways of doing it. You can divide the employment cost by 12. That's to find out how much it is for each month, multiplied by 7 months, or we'll have this 30 multiplied by 7 all over 12. Okay. So back to our solution. So we have employees cost. Employees cost. We have 30 million divided by 12 months. Okay, how much do we have? What do we have? What do we have?
17.5. 17,500,000.
Okay, thank you, ma'am. Okay, next cost. Next cost says cost of dismantling existing structure on the site. Is it going to be included? Okay.
Excuse me, ma.
Yes, ma'am.
Okay. Sorry for taking us back a little. This number one, the 3.6 million, which was incurred as a result of faulty design work. Since it was incurred, so I'm thinking if it's going to be added to 36 million. So why is it now deducted from the 36 million as well as the 2 point? Because 2.1, I'm sure that it's okay to be deducted, but 3.6 million, I can't understand why it was deducted too.
Okay. All right. Does anybody want to answer that? For those of us that said we should add, can we give our reasons why? Okay, let me respond. What we are doing is we are calculating the cost of these assets. Okay. And like you rightly said, 2.1 million should be deducted because, it was fault. And the reason why 3.6 is deducted also is because this amount is a loss, okay? And it will be recorded in our profit or loss account. Everything here in this cost is going into our statements of financial position. That's under the assets column, which we will now be depreciating on. Every loss, all of these figures we are deducting is going to be reflected in the profit or loss account as the expense for that period. It's not going to be capitalized. But I don't know if it's clear.
Yeah, it is. Thank you.
So all material costs that relate to material wastage or material costs that has been incurred as a result of faulty design are not included as part of the asset, but they're actually expensed, and that's in the profit or loss account. Okay, so the next one is cost of dismantling existing structure on the site. Should it be included as part of the cost? If yes, why? If no, why? Okay, can somebody respond? Give me your own opinion on why you think it should be that way. This can be response so that we have 3 questions solved today.
I think it should be included.
Yes, good morning.
Good morning, ma.
Yeah, I feel it should be included because it's still a cost. You spent money on dismantling a structure that was there before you are erecting your own structure. So it's a cost that also should be added.
Okay, so we think that one should be added. How about production overhead directly relating to the construction? Note 3. Note 3 says the production overheads were incurred in the 7 months ending 31st July 2014. They included an abnormal cost of 750,000 caused by the need to rectify damage caused by site flooding. Okay. So what do you think should be done with the 750? Should it be added, should it be subtracted, and why? Okay. So for production overhead related to construction, this 6.5 million is directly attributable, like we've seen. They said production overhead directly related to the construction. So it has a direct impact on the construction, included as part of the asset. But then we have additional information. They said the production overhead were incurred in the 7 months ending 31st July 2014, and it included an abnormal cost of 750,000, which was caused by the need to rectify damage caused by site flooding. Now, this cost is not directly attributable production overhead. So we are going to deduct this 750,000 from the 6.5 million. Okay, let me include our the cost of dismantling. Just 4 million. All right, so production overheads. What do we have? What do we have, please?
Sorry, please, before you continue, why are we deducting it? It's still a production overhead. Does it have to do with the dates? Hello, can you hear me?
I can hear you, ma. Okay.
I say, why are we deducting it? Is it because of the dates? Please explain that particular item. Why the deduction? Why not addition?
Okay. That production overhead directly related to the construction. Okay, it's 6.5 million. Okay, so we know that in calculating components of costs, all right, we include costs that are directly attributable to that particular asset. So we are told here that production overhead directly related to the construction is 6.5 million. Then in note 3, we're told that the production costs were incurred in the 7 months ending 31st July 2014. Of course, it is still within the year. That's all those costs. That 6.5 million was incurred in 7 months ending 31st July 2014. And we're told that it included an abnormal cost of 750 million caused by the need to rectify damage caused by site flooding. Now, it is an abnormal cost.
Okay.
It's an abnormal cost. It is not directly attributable to the this asset. Okay, so
all right.
That is why we are deducting it. It is only production. Generally, overhead costs is usually not a direct cost. Okay, but the ones that have been apportioned to a particular, either a particular department or a particular asset, can then be allocated, can then be included. But if it is a general cost that has not been apportioned, okay, this sector, this is your cost, this other side, this is your cost, we cannot include it in it for a particular asset, because cost of an asset refers to all the costs that have been incurred in the process of either acquiring that asset or constructing that asset. So this 750,000 is not a directly attributable production overhead cost. That is why we are removing it from the 6.5 million.
All right, thank you.
Welcome. So the next, we have architects and other consultants fee fees directly related to the construction. So are we going to include it or we're not going to include it?
We're going to include it.
Okay, we are going to because it's directly related to the construction.
Yes.
Okay, how about the next one? Cost relating to commissioning of the factory. Cost relating to the commissioning of
I think that should be expensed.
It should be expensed. Okay, why?
Because yes, it's directly linked to the factory, but it really does not have any economical benefit to it. The factory will still work with or without commissioning.
Thank you, Ma. Okay, how about allocated general administrative overhead? Allocated.
No, that should not be added.
Okay, yes.
Because it's not directed to the factory.
Yes.
It's not a direct cost to the factory.
Okay, thank you very much. The next one, cost of relocating staff who are to work at the factory, 1.8 million. Should it be included or not?
No.
I think
yes,
it should be included. It should be included.
Okay.
I think so too.
Okay, why?
Why it should be included? Or why it shouldn't? Yeah,
why?
It should be included. I'm listening, Ma.
Okay. Yes. You said it should be included, so I'm asking why?
Yes,
why
it should be included because if there was no factory construction, this cost wouldn't have been incurred. There would have been no need relocating the staff. So because they are going to be the ones to make the factory work, so they are important to it. So that cost is directly related to the factory.
Okay, any contrary opinion?
Yes, ma'am.
Okay, sir.
Can you hear me?
Yes, I can hear you.
Yes, that cost, in my opinion, it should not be included in the cost of the factory because the staff who are to work in the factory, normally if you are working in the factory, you pay your own transport fare to where you are working. And if you are paying your transport fare, it does not have any impact on the cost of the construction of the factory. That is my opinion.
Okay. Okay, so let us note that what we're saying here is that this cost we are computing has to do with cost of the assets. So the cost of relocating staff from wherever they may to come work in the factory is not part of the cost of the assets. Yes, the cost has been incurred, but this cost will be expensed in the profit or loss account. That is, it will be recorded as expenses in the profit or loss account. We cannot include it as part of the cost of the assets. We can't include it as part of the cost of the assets. Of course, it's a cost. We agree. We recognize that, but then we cannot include it as the cost element of the assets. Okay, it will be expensed in the profit or loss account. Okay, so interest on loan to partly finance factory construction. That's note 4. Note 4 said, the bookkeepers limited received in accordance with IAS 23 borrowing costs. The loan carries a rate of interest of 15% per annum. So what do you think should be done? This interest element, the interest at a rate of 15% per annum. Okay. So what do you think should be done? How do you understand that particular question?
The interest.
Should be in profit and loss. I can't talk. I don't know.
Please share the notes again on that note 4.
Okay, ma.
Please. All right.
You said, see, with higher the loan
I need to
interest.
they received a loan, sorry, a loan of 20 million. Yeah.
Is it from my own? This one is different from my own.
Is I'm making an addition to the question. There was an omission.
Loan.
Okay. So this is the additional information for the interest on loan.
Yes, the cost to be added because it was taken for the purpose of the asset. So we are going to include the cost. But I think okay, the interest on the loan. So we are going to look for the 15% of the 3 million. That is what we are going to be adding to the cost.
That is 3 million.
Okay, I think they've given us the interest already.
Okay, what is the interest?
3 million. Is it the interest should be 3 million now? Interest on loan is 3 million.
Okay.
We may not need to calculate the 50% again.
Accordance.
Okay. Any other opinion?
Okay, for me, I feel since the 15% on the 20 million per annum is for a year, and it's been stated that this construction was for 7 months, so I felt the interest element, the getting 15% for that 7 months, like prorated, then the rest of the 5 months should be expense.
Okay, so please, can we let's go to the solution and try out something. Okay, we already had, there was an entry I was supposed to make, that's architect's fee. We agree that it should be included. So we said it was 3.2 million. Okay, so interest to be capitalized, that is to be added to the cost. Okay. So let's do 15%. Let's have working here. It's short working. 15%.
Can we see your Excel sheet?
Oh, sorry, I thought I had shared it. Okay. Can we see it now? Okay, so let's do a little working. Interest on loan. From additional information, we told 15% of 20 million, right? Interest on loan. Is that much? It said 15%. So what's 15% 15% of 20 million. 3 million, right?
3 million.
Yes.
So, which is what we had in our question. 3 million. But we're told that this construction took only 7 months, right? And this interest on loan is per annum. So we'll find, so we're going to remove, we're going to get for only 7 months. Okay, so 3 million per year. So 3 million. Okay. Then we multiply by 7 months all over 12 months. Okay. $12 months. How much will we have?
1.750.
1.750. Okay. So back to, we have a last entry on our question. Plants and machinery purchased and used in the building. Purchased and used in the building. So should it be included? Should it be capitalized or expensed?
Should not be included, though. It's not part of the assets.
Plant and machinery is an asset on its own, so it should be treated as a separate asset, not added. It could be subsequently used for other buildings. So,
okay, we're told that what we are constructing a new factory, and this question says plants and machinery purchased and used in the building. Emphasis on use in the building. Is used in the building. We're constructing a factory. So these plants and machinery purchase is used. So it's going to be included because we're using it in this new factory. We're using it in the building. So it's going to be added.
Sorry, when you say in the building, is it that it's used as part of the construction too? Hello, ma, can you hear me?
Yes, ma'am.
Yes, let's be clear on that. When you say it is used in this building, is it part of the tools that is used in the construction of the factory?
Okay, ma, the question says we're constructing a new factory. And what we know is that, okay, what is a factory? Can we define what a factory is?
It's probably a place where production takes place.
Where
people produce things from their raw material form, probably to a usable or finished form.
Okay, good. Okay, so a factory is a place where we produce things, we manufacture things from their raw state to finished state. And so a factory cannot be without machineries. So because if we just build a building without putting machines inside, it is just a building. It could just be a warehouse, but it's not a factory. So for it to be called a factory, it means those machines that we need to use for production purposes should be made available. So we are constructing a new factory and not just a building. So that is why plant and machinery is included as part of the cost of the factory. Let's take, for example, you want to open a restaurant and you're asked to calculate the cost of opening that restaurant. Of course, you include you need a gas, okay, and all those other machines like that, because that is what you need to use in actually carrying out whatever services or whatever production you want to carry out. So plants and machinery purchased is going to be included because it is used in the building. And we've said that factory refers to, is a place that, or is a place where manufacturing takes place. So plant and machinery is what is going to be used for production in the building. That is why it is included.
Bluetooth mode.
All right.
Bluetooth.
Okay, please can we add everything we have?
Sorry, I still want to ask. I still want to ask about these machineries, plant and machineries.
Yes,
but does it mean you are not going to have a separate account for the machineries in the factory and depreciate them over their useful life?
Okay.
Hello?
Yes, sir.
Are you with me?
Yes, sir, I'm with you.
So does it mean these plant and machinery are not going to be having a separate record in the book of the company and depreciated over their useful life?
Okay. Okay, sir. All these costs will have their own different ledger accounts.
Okay.
Yes, all this architect's fee, we can open a different ledger account for it. Cost of dismantling, production, plants and machinery as well. So plants and machinery purchased. If we want to have a record of all the plants and machineries we are buying or we have in the factory, either for a particular year or everything summed up together, we can still create an account for all of them. But then, if it's being, can we? Okay, it's going to be a separate account will be created for it as well. So as I said, all these entries here all have their own individual accounts, their own ledger accounts. So I don't know if I've answered your question. Hello, sir.
Yes, I'm okay.
Okay, sir. Okay, so please, what's the total?
115,500. 115,500.
Okay. So this is the total cost of the assets to be capitalized.
Please, the screen can be.
Okay. I said?
I have a question.
A question, okay, sir.
There's something I don't understand. In that interest that is capitalized, the interest there, 1.750, is you apportion it to 7 months. From the question, I'm not having the paper here with me. Can I see from the question, that is from the additional information, where I have 7 months?
This is the figure. Then we have additional information, note 4. So I'll go to note 4. Okay, sir, do you have any further questions? So we're told in this information that the building took 7 months to construct. Okay, I was brought to use on 30th September 2015. Meanwhile, this figure is 3 million. And our additional information says bookkeepers Limited received a loan of 20 million on 1st January 2014. And this construction took place for only 7 months. Okay, so we now did in our additional information 15% of 20 million. So please, can you calculate 15% of 20 million? How much would you give?
I understand. What the 7 months that my challenge, because I cannot see the 7 months the additional information for.
Right there. Okay, so let's move to the second question.
Please, if you are not asking any question or talking, please always stay muted. Please, it's important.
Okay, so please, can someone read the second question for us? Let's solve question 2.
Question 2. Can I go on?
Yes, ma'am.
Okay. 2A. Explain what is meant by complex non-current assets. And explain briefly how IS 16 requires expenditure on complex non-current assets to be accounted for. Can I go on?
Yes, ma'am.
Hello?
Yes, ma'am. Please go on. Go ahead.
2B. Fairline treats its aircraft as complex non-current assets. The cost and other details of one of its aircraft are: number 1, exterior structure, purchase date 1st April 2015, 120 million. Estimated life 20 years. Interior cabin fitting, replaced 1 April 2015, 25 million, 5 years. Engines, 2 at 9 million each, replaced 1st April 2015, 18 million. 36,000 flying hours. 10 years as at 1st April 2015. No residual values are attributed to any of the component parts. 1st April 2018, the aircraft showed it has flown 1,800 hours since 1st April 2018. In the year ended 31st March 2019, the aircraft flew for 1,200 hours for the 6 months to September, and a further 1,000 hours in the 6 months to 31st of March 2019. On October 2018, the aircraft suffered a bird strike accident which damaged one of the engines beyond repair. This was replaced by a new engine with a life of 36 hours at cost of 10.8 million. The mother engine was also damaged, but was repaired at a cost of 3 million. However, his remaining estimated life was shortened to 15,000 hours. The accident also caused cosmetic damage to the exterior of the aircraft, which required repairs at the cost of 2 million naira. As the aircraft was out, please roll up, ma'am. Was out of service due to the accident, Flight Line took the opportunity to upgrade its cabin facilities at the cost of 4.5 million naira. This did not increase the estimated remaining life of the cabin fittings, but the improved facilities enabled Flight Line to substantially increase the airfares on this aircraft. Required. Calculate the charges to profit or loss in respect of the aircraft for the year ended 31st March 2019, and it is carrying amount in the statement of financial position as at that date. Note, the post-accident changes are deemed effective from 1st October 2018. That's all, ma'am.
Thank you very much. Thank you very much, ma'am. Okay, 2A says, explain what is meant by complex non-current assets. Okay, if you saw this during the exams and you saw complex non-current assets, what will come to your mind, or how would you attempt to explain complex non-current assets? Please, can someone say something? Complex non-current assets.
Hello.
Yes, sir.
My understanding of complex non-current assets, they are another term for it is they are referred to as simple separate component assets. A typical example is the illustration in the either in the pack or in the video that was sent to us, where it is basically an asset which is made up of other significant assets. Let me just use that. A typical example is maybe a ship or an aeroplane, which is made up, though it is recognized as a single asset, but it is made up of other significant parts which are recognized as assets as well.
Okay, thank you very much. Okay, yes. Complex non-current assets is also known as separate components. It refers to a non-current asset that has a number of significant separate components. That means that this component can be identified on their own, and they possibly have different useful life. So for example, we can say a car. Someone will say, this car is okay. The only problem is the engine. We just need to change the engine. Okay, so the engine is a component of the car, but the engine also has its own useful life. Or you could say, okay, I want this phone. We need to change the battery. The battery is not strong, or the battery has issues or something like that. Okay, so we changed the battery. Now we've bought a new battery that now has a different useful life. Okay, so complex non-current assets refers to asset that has a number of separate components, and they can actually be treated separately because they have different separate useful life. So if the engine of the car has a useful life of 15 years, and then the body of the car has a useful life of 10 years, and then let's say the seats also have a useful life of 5 years, So we cannot, let's say, depreciate the whole car using one particular number of years. Okay, so we now depreciate the individual components separately based on their useful life. So that's what we mean by a complex non-current asset. So we have a question here, and this one is an aircraft, and Fairline treats this aircraft as a complex non-current asset. So the cost and other details of one of the aircraft are as follows, and we saw all of this. So the exterior has 20 years lifespan. The interior has 5 years. The engines, they have 36,000 flying hours. So they can only last for 36,000 flying hours. And the exterior here, exterior was purchased. We have 2 asterisks. And the asterisks here, we are told that 10 years as at 1st April 2015. So as at this 1st April 2015, that survived for 10 years. Okay, so no residual values are attributed to any of the component parts. Please, what is the meaning of residual value? And where does it come in? What is residual value? Where does it come in? And is there another name for residual value?
Yes, the other name is scrap value.
Scrap value, okay? So it's used when we are calculating the depreciation, the amounts for depreciation. That's where it comes in. So we have been told that there is no residual value. That means there is no scrap value. So we're not going to do carrying amount and the residual value all over number of years. Okay, so we also have more additional information, really a long note. So we're going to take it bit by bit so we can answer them together. Okay, so go over to my Excel sheets. Coming up shortly. So the first thing that we will do, or the name of the company. So what were we required to do? What was the requirement? What was the requirement? What's the requirement? We're required to calculate the charges to profit or loss in respect of the aircraft for the year ended and its carrying amount in the statement of financial position as at that date. So that simply means we have to calculate statements of profit or loss and also prepare statements of financial position. Okay. So we have statements of profit or loss. Extract, because it's not the full statement. For the year ended 31st March 2019. Okay. So please, who can briefly just tell me what's involved in statements of profit or loss?
Please,
who remembers
the sell part of it, sir, Mark.
We're not seeing the sell part of it.
Yes, yes.
It's on.
It's okay.
So can you see it now?
Yes, yes.
Okay. Okay. So statements of profit or loss we record revenue or income, then deduct cost of sales, we have gross profit, then we deduct the operating the expenses. we deduct expenses, which includes operating costs, and then we now finally have profit before tax. Then we have deduct tax. Then we have our net profit for the year. So we're going to pick items that reflect the profit or loss account from our question. All right, do we have revenue here or income? Do we have revenue or income in this question? Okay, I don't think we don't have cost of sales. So we don't have any gross profit. So we move over to costs. So what costs have you seen in the question? What costs will reflect in our profit or loss because of what is in the question? Okay. All right, let's go back to our question. You said here that at 1st April 2018, the aircraft log showed that it had flown 10,800 hours since 1st April 2015. In the year ended 31st March 2019, the aircraft flew for 1,200 hours for the 6 months to 30th September 2018, and a further 1,000 hours in the 6 months to 31st March 2019. So on October 2018, the aircraft suffered a bird strike accident, which damaged one of the engines beyond repair. So this was replaced by a new engine with a life of 36 hours at a cost of 10.8 million. The other engine was also damaged, but was repaired at a cost of 3 million. Okay, let's start with this repair cost.
This is the first cost.
Let's start with the repair cost because this one is straightforward. So the cost of repairs is 3 million. Okay, so this 3 million is the cost that was incurred. Is are we together? So this 3 million is going to come under profit or loss as an expense. True or false, please?
True.
Cost of repairs is a cost of repairs. Please, do we agree with me? Or do we have any questions? Cost of repairs, 3 million. Okay. Remaining estimation was 13 to 15,000 hours. Let's see if we have any other cost of repairs. The accident also caused cosmetic damage to the exterior of the aircraft, which required repairing at 2 million. Okay, repairing at 2 million. So this one doesn't need additional working. So let's just speak of them. And then we go to our profit or loss account. Okay, so the first was repairs of engine. And what we have is was 3,000.
2,000.
Then we also have repainting of the exterior. Of exterior, we have it as 2,000. So we're done with that. So we now go back to where we have all the depreciations and the rest. So let's go back, okay? There was one that was damaged beyond repair. Okay, on October 2018, the aircraft suffered a bird strike accident which damaged one of the engines beyond repair. This was replaced by a new engine with a life of 36 hours at the cost of this. Okay, so what was the cost of this asset that was damaged beyond repair? The cost value as at
1.8 million.
Of the engine, the cost of the engine.
That should be 9 million.
Damage, he said, which damaged one of the engines. Okay, so 9 million, right? Yes, it's true. 9, because we thought that engines with 9 million each. Okay. So for how many hours?
$36,000 hours.
36,000 hours. Ideally, they're supposed to fly. So how many hours did this engine actually fly before it had this accident?
1,200 hours.
1,200. Set as at 1st April 2018, the aircraft log showed it had flown 10,800 hours since 1st April 2015. That's starting from 1st April 2015. It had flown 10,800 hours. Are we together? Won't take it. Okay, so as at now, it had flown 10,800 hours. That is the accumulated depreciation for this number of years. Since, okay, between April 1st, 2015 to 1st April 2018, the aircraft log showed that it had flown for 10,800 hours. Okay. Is everything together? So we'll take that one first. We'll calculate.
Yes, we are with you.
Okay, so let's, that one, that means we're going to calculate the carrying amount. Of course, remove the depreciation, the accumulated depreciation. Over to our Excel sheet. Let's have here for workings. Okay, working. So this is a calculation. We're calculating calculation of carrying amount of the engine, of damaged engine, because it is from this carrying amount what we're going to have to take to for statements of financial position, and also extract our depreciation, which is a cost, at 1st October 2018. Okay. So the cost value as at 1st April 2015, we said is 9,000 because it was bought at 9 million each. So this 9 million. And less accumulated depreciation. Carrying amount of an asset simply means cost of the asset minus all the accumulated depreciation to that date. Okay, so less accumulated depreciation as at 1st April 2018. So from 1st April 2015 to 1st April 2018 is what we are looking at now. So we have the formula for depreciation is carrying amount or cost value, as the case may be, divided by the estimated useful life. So the cost value in this case, the cost value here is 9 million. And the estimated useful life, 36,000 hours. So we divide them. What do we have? 9 million divided by 36,000 hours. Oh, we have
$250
multiplied by 10,000 hours that was used. So out of the 36,000 hours, you've used 10,000 hours. So we are calculating for, division is based on, we are actually removing the cost of the asset that we've used. If the asset is supposed to last for 10 years, we've used it for 5 years. The way people usually say, I bought this shoe for 5,000 and I've worn it for 2 years. I don't wear the money finish. You understand? Okay, so that's what depreciation is all about. We are actually removing the value of what we've used already. So what do we have now? 9 million divided by 36,000 hours times 10,000 hours. How much?
2,700. 2,700,000.
2,700,000. Thank you. Thank you very much. Okay, so let's subtract that. What do we have?
$6,300,000.
Okay, so that's the carrying amount. At 1st April 2018. Okay. 6,300,000. Okay. So back to our question. Okay. We said in the year ended 31st March 2019, the aircraft flew for 1,200 hours for the 6 months to 30th September 2018, and a further 1,000 hours in the 6 months to 31st March 2019. Okay. Which period did the aircraft have the accident? The aircraft had an accident on 1st October 2018, right?
Yes.
Okay. So that means it flew again for 1,200 hours for 6 months before it had this accident. So we're going to deduct, that's the current depreciation. That's for this period, that's within the year. So we still have another depreciation to remove. So we're not going to have less depreciation of 6 months, less 6 months depreciation. That's from 1st April 2018 to 30th September 2018. All right, so that's 6 months. So we'll still have our cost value. Cost value is 9 million. Useful life is 6,000. Multiplied by 1,200 hours. So please, what do we have?
300.
300. So deduct 300. What do we have?
$6,000.
6,000. Okay. The carrying amount as at 1st October 2018. So this is the value of the asset that was damaged. Okay. So back to our question. Let's see what was said. So they said on 1st October 2018, the aircraft suffered an accident which damaged one of the engines beyond repair. Damaged one of the engines beyond repair. And it was replaced by a new engine with a life of 36,000 hours at a cost of 10.8 million. Okay. So the next thing we're going to do is to calculate, we've calculated the carrying amount of the damaged engine. Okay, we've left that one. Now let's look at the carrying amount of the exterior structure. Okay, let's finish with the engine. Let's finish with the engine. So after the what will be the depreciation charge for engine for the year? What's depreciation charge for the year for engine? Remember that we have two engines. One was damaged beyond repair, and the other one was replaced by a new engine with a life of 6,000 hours. So we're going to calculate the depreciation value for this one as well. So what will be the depreciation for the new engine?
From October to September. The depreciation is going to run from October 2018
to, okay.
That 1st March.
Okay, please, can someone give us a suggestion? Well, how do you think it should be treated? Because what we're looking at now, we want to find the cost of depreciation for engine. Remember, it is a complex non-current asset. We find cost of depreciation for engine. We also find for cabin, and we also find for the exterior. So note that in the profit or loss account, the depreciation that is recognized is the one for the year and not accumulated depreciation. The reason why we calculate accumulated depreciation is for statements of profit, statements of financial provision. Okay, so we are told that this financial statement, this account, is for the year ended 31st March 2019. So that means this year's statement started from 1st April 2018 to 31st March 2019. And from our computation, we've been able to get depreciation value of this engine, damaged engine, to 1st October 2018. So now we know that one was repaired.
Now from 1st October to March, 6 months. The flying hour. Yes.
Okay. Okay, sir. All right, so it was replaced by a new engine with a life of 36 hours at a cost of 10.8 million.
Yes.
And we're told that, please, over to this first part one I'm highlighting, okay? So in the year ended 31st March 2019, the aircraft flew for 1,200 hours for 6 months to 30th September 2018, and a further 1,000 hours in the 6 months 31st March 2019. So we're going to find the depreciation cost figure for this extra 1,000 hours. Please, do you agree with me?
Yeah.
Yes. Okay. So let's proceed.
200,000.
Okay, so we're going to have, what is the cost of the engine now?
10.8.
This new engine. Okay, cost
10.8.
Okay, 10.8. How many hours?
36.
Okay, 36, still 36. Okay, multiply by how many hours was it used for this year?
1,000.
1,000, so times 1,000 hours. What do we have?
300,000.
300,000. Okay, let's keep that one too. Okay. Okay. Then let me go back to the question. Okay, we told that the other engine was also damaged, but was repaired at a cost of 3 million. However, its remaining estimated life was shortened to 15,000 hours. Okay, let's see if it has anything to, if we were told the additional hours it flew. Okay, the estimated life was reduced to 15,000 hours and not 36,000 hours again. Remember that it has been used for 10,000. Remember, 10,800 hours since 1st April 2015. Okay, so we're going to find the depreciation figure when there is a change in useful life. There's a change in useful life. Okay, so
for damage.
So what's going to be the costs, or let's say yes, the cost of the asset? That we're going to find the depreciation for. Okay, what's the carrying value of the asset as at this date?
6,000.
6,000. Thank you very much, sir. 6,000.
6 million.
Yes, that's 6 million. Good. Thank you very much, sir. So let me have a heading: change in useful life. So the change it has changed from 36,000 hours
50.
to 15,000 hours.
The rate of 150,000.
And in this period, it has already found the carrying value as at this date, okay, is 6 million. So to calculate depreciation, after the accident, how many months?
Excuse me, ma'am.
Yes, ma'am.
Sorry, the new engine, the cost, I thought it's 10,800,000.
Yes, ma'am. Yes. We've done that one.
So I think this something.
This is the new engine. Calculation for new engine. Depreciation, ma. The cost 10,800 naira.
And that's a useful life.
Then useful life. Yes. So we had done that one for new engine.
300,000.
Yes, the damaged one, we were able to repair it, but the useful life is no longer 36,000, but now 15 hours. Okay, I remember that the carrying value of the engine as at 1st October, that was before the accident, it was 6 million. You know, we cannot use 9 million again because we already removed all the depreciation for the number of period it has been used. So as of now, the value of the asset is 6 million. So that's what we're using to calculate our depreciation after the accident. Okay. So we have 6 million divided by how many hours?
15 million.
15,000 hours. Thank you, sir. 15 hours. Okay. And we'll multiply by
What, 200?
By how many hours are we multiplying it with?
1,200.
1,200? Are we sure? We had already found that depreciation. So if you look at it here, that one was before the accident.
Okay.
Accident took place took place in October 2018. Let me go back to the question. Accident took place in October. Okay, so the 1,200 hours was that in the year ended 31st March 2019, the aircraft flew for 1,200 hours for 6 months to September 2018. Okay, and our account is ending 31st March 2019. So this 1,200 hours was before the accident in October. Okay, so we're told that the other engine was also damaged but was repaired at the cost of 3 million. However, estimated useful life was shortened to 15,000 hours. Okay, let's go down. Okay, it's not here. Okay, it's here. And then we said the aircraft flew for 1,200 hours for the 6 months dated September 2018, and a further 1,000 hours in the 6 months to 1st March 2019. So we've already done the one for 1,200 hours. That was before the accident. But after the accident, we now have another 6 months, but it's 1,000 hours.
Yes.
Yeah, so we're using 1,000 hours. Okay.
It's 400.
1,000 hours.
400,000.
400,000. Okay. So depreciation is 400. Okay. Depreciation for the engine. Okay, so let's bring all our depreciation charge together. So depreciation for engine. For engine altogether, okay, that's for this year. You know, like I said, profit or loss account is calculated. The figures in profit or loss accounts is the one for 1 year, not accumulated depreciations. The reason why we brought in accumulated depreciation is because of we want to find out the carrying value as at each date. So in the year 20, that's in the year from 1st April 2018 to 31st March 2019. Let me include it here. So we have that in mind. 1st April 2018 to 31st March 2019. All right, so the first depreciation, we've already done it. I'm just picking them into this one. We are going to bring this one. This one was
2,700.
No, this is accumulated depreciation. That is the one that ended as at 1st April 2018. So the one we're picking is from 1st April 2018 to 31st March 2019, because our financial statements is dated at the end of 31st March 2019. So between 1st April to 31st March 2019 is what we're taking now. So we have 300 here. This one was before the accident. Okay. So let me just write before the accident. What do we have? 300.
Yes.
Okay. Okay. Now, before the accident, you know, we were making use of 2 engines.
Yes.
True or false? Had 2 engines. So instead, let me separate them for easier understanding. Before the accident, engine 1 and engine 2. Engine 1, engine 2. Okay. It's 300. Agree? And 302. That's before the accident. After the accident, one was damaged and was replaced. So damaged / replaced. So what's the division for that one? The one that was
replaced.
300. 300.
Then the damaged one 400 and 700.
300. Then the one that was repaired, how much was depreciation? We've done already. 400, right? The one that was repaired, it was repaired, but there was a change in useful life, right?
Yes.
That's what we have. So 400. So what's the total?
700.
No, add all this, the total depreciation. 700 plus the 300, the 600 we had before.
1 million.
1
million.
1 million.
Yes.
700 plus 300 plus 300. This is 300.
That should be 1,300.
1,300. 1,300. So our depreciation for engine is 1,300. So we're going to go back to our profit or loss account. Okay, so depreciation.
Oh, yes.
Okay. So engines. Engines, we have 1,400. I'm sorry, 300. Okay. Then the next, we have, we'll check for any other components. You know, remember, engines' useful life is different from exterior and the rest.
Please, before we go to other components, I'm lost, so.
Yes.
Please, were you following?
Hello, can you hear me? I was following the class, but at a point, I was lost. The first time depreciation we got was 2.7. And you said that one was before the accounting year. I didn't get that part.
Yes, it was before the accounting. That is accumulated depreciation of the previous years.
Okay.
So the reason why we are finding that is so that we'll be able to know the carrying value of the assets as at this year. This is it. So this is the carrying amount of the assets as at 1st April.
Okay, then after that, We have another one of 300,000. That one is it's 6 months depreciation between April and September.
Before the accident.
Yes.
Is that one? Yes, before the accident. We have the one of 300,000.
Mm.
Yes.
Then the new engine, we have another one of 300,000.
Yes.
Then after the accident, we now had another one of 400,000.
Yes, ma'am.
But the total depreciation you calculated was 1.3.
Yes.
But
Okay,
if
yes.
we had to go by what we worked, we just had 300, 300, and 400, which is not up to 1.3.
Okay, all right, ma'am. So I didn't write that one. I just explained. So I think I should. Maybe I should. Okay.
That is, you separate this.
Maybe I should duplicate it. Yes, engine 1 and engine 2.
Oh, for the first 300,000 or for the second 300,000?
The first one, that's before the accident. The two of them were in operational. So that makes it 300 and 300. That's why I said engine 1 and engine 2.
All right, all right. I'm okay now.
That means that one's supposed to be 600.
Yes.
I didn't want to do it together because when they were damaged, they were separated. So what I should do is to have 2 columns here. Okay. One for one engine, another one for another engine, but to have the same figures.
300 again.
Mm. Okay. So I should just do this.
That's for the one that is damaged, Abi.
That's before the accident.
Yes.
Before the accident. So let me just do it so that it will be 2, engine 1 and engine 2. So it will still give us the same because they were both the same amount and the same number of hours was used. So we're still going to have 6,300. Okay.
That means this. That means this depreciation before the. That's before that from the previous accumulated depreciation supposed to be this 2,700 multiplied by 2.
Yes, sir. I said I don't want to add them together. I don't want to make it one because one was completely replaced while the other one was prepared. So that's why I'm having 2 columns, engine 1 and engine 2. One of the engines was damaged. The other one was replaced. So
what I'm saying, no, we calculated the accumulated depreciation before 215.
Yes, sir.
And that is, we got 2,700, 2.7, which is supposed to be for the 2 engine.
It's for 1 engine. 1 engine was bought. So let's take the question. 1 engine was purchased for 9,000 naira. I'm sorry, 9 million. 2 was for 18 million.
Okay, so that means if we are to calculate for the 2, we would have used 18 million at a go.
Or you do it separately. Like now, I've separated them, engine 1 and engine 2.
Okay.
Yes, sir. Okay, so we're done for engine. So let's check. Okay, they said the accident also caused cosmetic damage to the exterior of the aircraft, which required repairing at a cost of 2 million. We had recognized this repair cost of 2 million already.
Yes.
So as the aircraft was out of service for some weeks due to accidents, so Flight Lights took the opportunity to upgrade its cabin facilities at a cost of 4.5 million. 4.5 million. This did not increase the estimated remaining life of the cabin fittings, but the improved facilities enabled Flight Lights to substantially increase airfares on this aircraft. Okay, so cabin facilities, cabin fittings and all. So we are also going to find the depreciation for the 3 years before all this upgrading took place. Okay. So before I go forward, what's the, because we are going to calculate depreciation for cabin fittings, what's the cost of the cabin fittings?
1.5.
25 million, okay. Number estimated useful life, how many years?
5 years.
5 years. And it is existing for 3 years. That's for the accumulated depreciation, right? That's 3 years, from 1st April 2015 to 1st April 2018. True or false?
True.
Because we're not using hours here, we're using years. The first one, we made use of hours. Okay, so let's go. Workings. So depreciation. This is working too. Cabin fittings. Okay. So calculation of current value. So cost of cabin fittings 25 million. Useful life. Useful life is 5 years. And it was used for 3 years. Okay, so what do we have? What's the accumulated depreciation?
15 million.
Okay, we have 15 million. Okay. So the cost value is 25. Okay, so 25 minus 15.
10.
What do we have? 10.
10 million.
Okay, so this is the current value as at as at 1st October. Sorry, as at 1st April 20. As at 1st April 2018. Okay. Okay, so we'll now less 6 months depreciation before the upgrading. True or false? because the upgrading took place in 1st October after the accident. So we'll still repeat same cost, useful life. Okay, multiply by 6 all over 12. What do we have?
$5.2 million.
Okay, 5.2 million.
No.
Okay. What should it be?
2.5.
2.5.
2.5, okay. Okay, how much? If we subtract it, what will we have?
That's 7.5.
7.5, so that's the carrying value as at 1st October 2018. That's before the accident, or let's say before upgrading. So after the accident, we carried out an upgrade. And how much did the upgrade cost us? How much did the upgrade cost? Let's go back. We spent how much for upgrade? 4.5 million. Can we see it here? Yeah. 4.5 million was spent on the upgrade, right?
Yeah.
So this is going to increase the cost of the asset because you've upgraded it. So we'll include it, we'll add it to our carrying amount to give us a new figure. So cost of upgrade 4.5. So adding, what do we have now? This, what do we have?
12 million.
5,000.
Okay. All right, so this is the revised carrying amount. Okay, so we're told that the number of the useful life did not change. Okay, so we're now going to calculate the depreciation for the next 6 months. Depreciation for 1st October 2018 to 31st March 2019. That's 6 months. Okay. We are going to have cost. Revised cost is what we're using. Revised value. Okay, revised cost value. Let me use that, which is 12,000. Which is 12,000 divided by still how many years? How many years are we going to use?
Still 5 years.
5.
No, we can't use 5 years.
Mm-hmm.
The reason why we can't use 5 years, we can't use 5 years. And this is the reason why we calculated accumulated depreciation. Okay.
6 months.
Yes, no, we won't use 6 months. We've already removed depreciation value for 3 years. That's from 1st April to 1st October 2018. True or false? From 1st April 2015 to 1st April 2018. We removed for 3 years, right? That gave us, we removed for 3 years. Then we've also removed for 6 months. Okay. So how many years do we have left?
18 months.
Huh?
18 months.
18 months. Okay, that is 1.5. Okay. We have 1.5 years.
1.6.
1.5, as in what I mean is 1.5.
All right.
Okay, so we multiply it. That's for 6 months. So we have 6 divided by 12 months. Okay. So what do we have? So we have
4 million. 4,000. 4 million.
Okay. So we subtract, we have what? How much do we have? We have 8,000 or 8 million. All right. To remove. So let's now add all the depreciation under cabin fittings. That's for the year. From 1st April 2018 to 31st March 2019. Okay, so how much and how much do we have? That's from 1st April 2018. So we have depreciation for 2.5, right? True or false?
True.
So 2005 plus
2.5.
Plus 4,000, 2.5 plus 4,000. How much do we have?
4,000.
Okay. No, not 4,000. What was our
6,000.
Okay, we have 6.5. 2.5 plus 4,000. That's true. So 2.5 plus 4,000. So depreciation on cabin fittings. We have 6,500. So we have one left, exterior structure. Let's check our question. What did they say about exterior? Okay. So we were told that exterior structure was purchased for 120,000 and has a useful life of 20 years. I believe. Okay, so depreciation for exterior. What can you say? Depreciation on exterior. Okay, what was the cost for exterior? Cost value for exterior?
$120,000.
120,000. Okay, then let's calculate depreciation, accumulated depreciation. Accumulated depreciation as at 1st October. Okay, so cost useful life. Cost is 120 million. How many years?
20 years.
20 years, useful life.
Okay.
Excuse me, madam.
Yes, sir.
I can't see your worksheet.
Okay. On, sir. Okay, I'm useful life with 20 years. Okay. Okay. So how many years?
Yes.
How many years have we used this exterior cap? Or which year was it purchased? Let's find out. It was purchased. Okay, we are told that here, this asterisk, that exterior structure has already been used for 10 years. Before this 1st April 2015, it's already been used for 10 years. So as at this date, it was 10 years. So plus 3 years, that's how many years? How many years is that?
13. Yeah.
Okay, so we're calculating for 13 years.
13 years.
Okay. How much is that?
This man, where did you get the 3 years?
Okay.
78,000.
We're told that the exterior structure was purchased at 1st April 2015. And we have this asterisk here. And the asterisk says that this exterior structure, as at this 1st April 2015, has been used for 10 years.
Yes.
Already. So between 1st April 2015 and 1st April 2018, okay, that's 3 years. So 10 years plus 3 years is 13 years.
Okay.
Yes. So please, what do we have? What do we have? Please, what do we have?
We have 78,000 as depreciation.
Okay.
78,000.
What now will be the carrying amount?
70.
Yes. What now?
Hello?
You subtract it.
42 million.
78,000.
That's 42 million as the carrying amount.
Okay.
That should be 120 minus 140.
That's 42.
Okay, thank you, sir. So we'll now find the current depreciation for the year. For the year is how much? We have cost of our useful life, or it's only going to be for 1 year now. Divided by 20 years.
Thousand.
Okay, so 1 year, how much is that?
6,000.
6,000. Okay, so how much do we have?
1,000.
Sorry.
Current amount.
We have 42 minus 6.
80.
Which is how much?
36.
It's 36,000. Okay.
Okay.
Okay. So the current depreciation for the year is 6,000. So we come here, exterior. Exterior, we have 6,000. So I think our cost is complete. How much is total depreciation? Let's add these three figures together. These three.
13,800.
13,300.
Okay,
13,800.
Okay, this is for total depreciation. Okay, thank you. We also had a loss on damaged, loss on the engine that we disposed.
Total depreciation is 14,300.
It's 13,800, sir. Okay, so we said that we're told that the engine one of the engines was damaged beyond repair. Okay, so we had to dispose it, right? So it's damaged beyond repair. Beyond repair. So let's look at our worksheets for depreciation. Remember that the carrying amount of the engine was 6,000. as at when the accident took place. That's for engine 1. Okay. Remember that one of the engines was damaged. And as at when it was damaged, the value of the engine was 6,000, well, was 6 million, you know. So we had to dispose it. So the loss on disposal is that 6 million. Okay, so let's add our total operating cost. What do we have?
Excuse me, ma'am.
Yes, sir.
Please, for the depreciation, engine, cabin fittings, and exterior, the figures 1,300, 6,500, and 6. Okay. Okay, it's clear.
Okay, sir. So what do we have as a total total operating costs? Let's add everything together.
24,800.
24,800.
24,800. Okay, thank you very much. So let's go back to the statement. Okay.
Hello, it's 24,800.
Okay. 24,800. Okay, ma. Okay, so let's go back to the statement of financial position. There's an extract as at 31st March 2019. Okay, so.
Me, ma'am.
Yes, sir. Yes, ma'am.
I missed the loss on engine disposed.
Okay. In the question, we're told that there was an accident in April 2018 and that one engine was damaged beyond repair while the other one was replaced, was repaired. Okay, so the one that was damaged beyond repair, we had to throw it away. Okay, and the carrying amount of that asset as a then was 6,000. Remember? Let me go back to the sheet. Okay, the carrying amount. Remember, I told you there are 2 engines, right? So the carrying amount as at 1st October 2018, before the accident, was 6,000. So since the accident now happened, we had to throw that one away. So it's a loss on us because we've not been able to recoup the amount we spent in buying it as at some years ago. You understand, ma?
Yes, I got it. So thank you.
So we start with non-current assets. Non-current assets. Okay. We have exterior. We have exterior. So now this is where all our carrying value for the period is going to be shown. Just list them. Exterior, engines, and cabin fittings. Okay, the engine, let me divide them into 2. Old engine and new engine. Old engine. And then new engine. So so that we can analyze it properly. Okay, so the carrying amount as at 31st March 2019, carrying amount of exterior okay. Carrying amount of exterior 6,000. Can we see it here? Carrying amount of exterior 36,000. Can we see it?
Yes.
Carrying amount
Yes,
for exterior 36,000. Okay, so that's 36. Then old engine. Carrying amount of old engine and new engine. Okay, this is for cabin fittings. Okay, let's take cabin fittings. Carrying amount for cabin fittings as at 31st March 2019 is 8,000. So we pick it, we have 8,000. So engine. Okay. So carrying amount for engine. We're told that okay. So the one that was repaid, that's the old engine, so 6,000. Then after the accident, you have to remove depreciation charge of 6,000 or 400, sorry. So 6,000 minus 6 million minus 400,000 gives us 5.6 million. That's for the old one that was repaired. Okay. Then we told that there was a new engine that was purchased. New engine that was purchased. So it was purchased at 10.8 million. Okay. So the depreciation is 300. This is the cost of the new engine, 10.8 million minus 300,000. That will give us 10,500,000. Okay. So please let's add everything together. What do we have? What do you have? Okay, 6,100, all right. So that's the total. All right, so for the third question, it's something we can do on our own. So we'll do it, please, and then we'll send it. Then anyway, you have issues, I'll send explanations on how to do the entries. We've come to the end of today's class. I'll send this Excel solution to the class group so we can have it. So thank you very much for participating in today's class. See you in our next class. See you in the WhatsApp room.
Hello, ma'am.
Yes, sir.
Ma'am, can you also send the question also?
Okay, sir, I'll resend the question.